Good afternoon, ladies and gentlemen, and welcome to the Central Asia Metals PLC H1 2021 results presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged, can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Please just simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we'll notify you by email when they are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you would give that your kind attention, we would be most grateful. And I'd now like to hand over to Nigel Robinson, CEO, Central Asian Metals. Good afternoon.
Yes, good afternoon, and thank you for your time. And welcome to Central Asia Metals H1 2021 results. Just going through the disclaimer there, read that at your leisure, please. Obviously, not enough time to read it now in small font. But a summary, first of all, of our results for the first 6 months of this year. On the back of very strong commodity prices, we've got some good results to share with investors today. We've had some stellar performance in terms of percentage increases on the comparable period for 2020. But as many of you will remember, 2020, first half of 2020 in particular, was a particularly dire period for a lot of people with the impact of the coronavirus pandemic, which started around that time. So revenue, first of all, increased from $75.4 million up to $106.3 million, and generating an associated EBITDA from that number of $64.4 million. That's a margin of 61% on that revenue. That has led us to a free cash flow number on the left-hand side. You can just see on the bullets there of $48.9 million, an increase of 131% from the comparable period in 2020. That free cash flow number is the number that we use as a board to decide what dividend to pay back to the shareholders. And for this period, we've agreed on a 40% repayment of that, which leads to a dividend of 8 pence, up from 6 pence in the comparable period. We also decided at board level to pay back some of our debt early on the back of these strong cash flows and a healthy balance sheet. And so we're repaying early $10 million of our corporate debt facility. So a good financial performance, strong commodity prices, which continue into the second half of this year so far, and a good return back to shareholders, and also paying back early some of the debt and deleveraging. At the half year, we had just under $61 million of debt, gross debt, and we had cash in the bank of $54.3 million. Outside of the finances, we've had a good response to COVID-19 at both sites. We've got good procedures in place to protect and maintain the welfare of all our staff, and also to maintain the operations through the COVID pandemic, which we've managed to do. On health and safety, we've had 3 LTIs in the period, which is a slight disappointment to management, I have to say, and I'll touch on more of that later. Overall sustainability, we produced our second sustainability report in April of this year to GRI standards, and we're pleased with the output of that and the feedback we've had from investors in terms of what we're doing to improve our ESG credentials. And one specific target which we've achieved is to agree in North Macedonia an electricity supply agreement which will be 100% renewable with our supplier EVN in country. And that leads effectively to a 35% reduction in our CO2 footprint. We have more work to do on that. We're continuing with work on Scope 1 emissions at SASA and Scope 1 and 2 at KOUNRAD, and we'll be reporting later in this year or next year on our overall targets across the group. And finally, we're well enhanced on our cut and fill project at SASA, and the production numbers, as you can see there on the slide, for copper, zinc and lead are 6,200 for copper, 11,292 tonnes for zinc, and 13,807 tonnes of lead in the first 6 months of the year. On that point, I'll hand over to Gavin, our CFO, to give a little bit more detail to the financial numbers.
Thanks, Nigel. What you can see on that slide is, as Nigel mentioned, the strong commodity prices we've enjoyed over the past half. If you look at them compared to H2 2020 and H1 2020, we have seen significant rises in copper price in particular, slightly more modest for zinc and lead, but far better off than we were a year ago in this position. And that has been as a response to stimulus provided by governments and demand for metals like copper in the transition to green economy, and zinc as we move towards more galvanized steel demand. Lead has been supported by some supply disruptions in Peru, but the semiconductor shortage has suppressed automotive industry demand, so we're seeing that filter through to lead as well. Treatment charges we mentioned here because those feed directly through to our lead and zinc revenues. We have seen an increase half on half in the TCs, modest increase of 4%, but those contracts run from 1st of April to 31st of March, so we are going to see a benefit of lower treatment charges from 1st of April onwards, and that is not fully filtered through into these financial results quite yet. Look at the income statement. The revenue, as Nigel said, is 41% up period on period. We are seeing some cost pressure coming through. Cost of sales has gone up around 13%, and I'll talk through some of the details of that in a minute. And the reason we are reporting adjusted EPS in the bottom line of that table is because we are stripping out a non-cash unrealized hedge loss from the income statement to present that adjusted EPS on a like-for-like basis. But what we are pleased to report is improved EBITDA in spite of those cost pressures that we are facing. We can see the increase in revenue by metal in the table below on the bottom right-hand side of the thing. $20 million increase in the copper revenues. That's because of a 64% increase in the copper price received. Similarly, for lead and zinc, we've seen a 26% increase in the lead price and a 44% increase in the zinc price, driving those higher revenue numbers. EBITDA margins on a segmental basis remain strong, 80% at KOUNRAD, which is a stunning result, up from 73%, and 54% at SASA, which is again a very profitable result. We look at the development of EBITDA, again, largely down to revenue increases half on half. And on the negative side of the equation, we are seeing some of those cost of sales, $3.1 million increase coming through, a fair value loss on some hedge instruments we put in place of $1.9 million and $1.9 million G&A, which is again non-cash, to leave us with EBITDA of $64.4 million. If we look at the costs in more detail, starting with KOUNRAD, we've seen a 9 cent per pound increase in cost period on period. 4 cents of that is attributable to increased reagent consumption in the first few months of the year. That is down to winter operations exclusively on the western dumps for the first time. We think that's an issue that we've now understood and resolved, and we don't expect that to persist through certainly in the second half and certainly in the first half next year. Electricity prices, part of the cost increases we are seeing. We've seen that equate to a 2 cent per pound increase in our costs. And then, of course, the 3 cent balancing is due to slightly lower production of 393 tons period on period. One other element, which is probably not entirely clear from this slide, but in the announcement itself, is that the cost of sales at KOUNRAD are around 20% higher than they were period on period. Half of that increase is due to additional royalties we've paid to the government of Kazakhstan, and that relates directly to the higher copper prices that we've enjoyed. If we look at SASA, again, cost increase from 43 cents a zinc equivalent pound to 59 cents. When we convert from lead into zinc, we look at the proportion of production, and then we apportion that the cost of the zinc revenues against that production to make that conversion, and that has resulted in a 7 cent increase in the cost base. That is as a result, as I said, of the relative movements of the zinc and lead prices, but also of the proportion of zinc produced versus lead increasing from 37% to 42%. Nigel spoke about the slight sort of decreases in production at SASA. That was due to some maintenance that we brought forward on the mills, and also some lower grades that we got as we went through some difficult ground conditions. That's resulted in a 4 cent a pound reduction. And then cost inflation itself equates to 5 cents. That is primarily reagent costs and salary costs that have gone up, but 41% of those cost increases are down to adverse foreign exchange movements. The balance sheet's in really good shape, and that's what drove the decision to prepay $10 million of our corporate debt facility. So you can see that, you know, the cash position at the end of the period, $54.3 million, $52.2 million outstanding balance on the Traxys corporate debt facility. That's where we're going to apply that additional $10 million. And we have liquidity available in North Macedonia of $10 million, $8.7 million of which has been drawn through the period. Let's go to the next slide. CAPEX, important for us always, but in this period has really been the start of what we call the cut and fill project. So I'll stick to sustaining CAPEX first. We've incurred $2.9 million of sustaining CAPEX at SASA, related to mine development and some new items of equipment, some of which is fleet replacement. But we do have a new drill rig that's arrived on site as well. $1.5 million of CAPEX at KOUNRAD, again primarily related to, you know, ongoing operations there, with an additional $500,000 related to what we call an intermediate leach solution process, which will allow us to operate both east and west through the winter, and as I said, reduce that risk of additional reagent costs I mentioned earlier. Cut and fill project, that is to future-proof the SASA mine. And so far we've spent $3.3 million there on what we're calling the central decline, which will allow for much more efficient access to the ore body. And then the backfill plant and dry stack tailings and prepayments related to those make up the balance of that CAPEX, and we can talk in more detail about what that means for the mine going forward. Last slide on the finances is just the development of the cash balance from the end of December last year to the end of the period. As you can see there, $19.2 million of debt repayments, $19.4 million of dividend repayments. All of that is value directly to shareholders, and purchase of PP of $7.7 million. In addition, we've paid income tax of $6.1 million, some interest on the debt, and you can see some overdraft payments that we've been made through the period as well. But again, leaving that $48.9 million of free cash flow generation, off of which your dividend of 8p has been calculated.
Thank you, Gavin. These are our interim results, so as you can see, a lot of focus on the financial numbers and how we've performed. And I think you can see from what Gavin's just briefed you on that generally the business is in a good shape financially, both in the balance sheet and also the financial performance. But just a quick update on other things that we've been doing in the first 6 months of the year. On a sustainability update, health and safety, I mentioned before, rather disappointing that we have had 3 LTIs. We always target 0. We never want any incidents on site, but unfortunately these things do happen on a mine site. We've learnt our lessons from them, and we'll make sure we put corrective procedure in place or whatever we need to do based on the incident. Our LTIFR, which is a measurement we have in place for management remuneration, was 2.5 at the half year. COVID-19, we've got good processes in place. We've had them in place now since March 2020, April 2020, when the pandemic first hit us. I think they've served us well, but we're ever vigilant about that. And one thing we have been doing over the recent past is trying to get as many of our staff vaccinated against COVID-19 as possible. Initially, there's a lot of hesitation, a lot of skepticism effectively about having vaccines, and indeed at KOUNRAD we initially had 15 people only came forward to wanting to be vaccinated. We've now got to a situation where almost 100% of our workforce are vaccinated, which has been helped by government pressure effectively, whereby without the vaccination it's been difficult to live your life effectively in KOUNRAD, both from a business point of view and also socially. Same is true in SASA, but not quite as advanced. We've got about 36% of our employees are now double vaccinated. We have an ongoing education program to try and encourage them to be vaccinated, and we'll continue with that. And I think the government themselves in North Macedonia are slowly but surely making it more difficult for people without the vaccination. So that helps us on site. So health and safety of the staff is important to us. Just moving on to other things to do with sustainability. Next slide. So we have put out our second sustainability report, as I mentioned before. I won't labour the point on that, but it's been well received by our investors. It's a very good, open and transparent document that shows what we're doing. Looking to the future, we are looking to finish off on our climate change strategy. We're doing quite a lot of work on that in the first 6 months, and we'll complete on that with specific targets for greenhouse gas emission reductions, other reductions and improvements that we can make across the 2 operations in the coming 6 months. We have also worked on our asset retirement obligation liabilities across the patch, and we've engaged external consultants to help that and to help us plan for the future. And last but by no means least, really, many of you will remember that we had an incident at our tailings facility in North Macedonia almost a year ago to the day. And one of the initiatives that came out last year in August was the global industry standard for tailings management. We have agreed to comply with that, and we've got a timeline of 3 years to comply with that. We did have an independent audit on site in late June, early July. It was very commendable about the changes we've made to the operating procedures at SASA and how we've met the compliance with this particular standard. Still things to do, but we are moving in the right direction to comply with that standard, and we got a good report from the auditors on that. Moving to the next slide. Again, performance and targets, just to emphasize the point here that for each of our 5 pillars of sustainability, governance, health and safety, managing our people, the environment and community, we set targets now, and the executive and the senior management are rewarded against those targets for delivery on those targets. For 2020, as you can see in the middle column there, we achieved nearly all of them, apart from unfortunately suffering the TSF4 incident last September. Put similar targets in for this year, and the same will continue as we work towards improving our ESG credentials. Next slide, please. Just very specifically on this greenhouse gas emissions, still work in progress. We estimate that about 100,000 tonnes of CO2 is emitted from our 2 operations, both in Scope 1 and Scope 2. And the latest negotiated agreement with the electricity supplier in North Macedonia should reduce that by approximately 35%, which is something we're pleased at. But we've more work to do on that, and we'll consolidate the whole thing up into our climate change strategy over the coming months and report it publicly in our sustainability reporting. Next slide. Finally, working with the community is something which we've always valued. We've always put quite a bit of effort into, and both sites now have their own independent legal foundations, like a charitable foundation that we put so much money into every year and work on particular projects. The one particular one in North Macedonia that we're very proud of is the youth park by the river there, which was agreed upon with the local mayor as part of our goodwill gesture back to the community in Kamenica, following the tailings dam incident last September. We've now completed on that, and also we've completed on effectively the river remediation, which is the next slide, showing the cleanliness of the rivers following the incident last September. We now estimate we've removed probably 100% of the tailings. You'll probably never claim 100%, but certainly a high 99, 98% of the tailings will have been removed. We've removed all the silt traps, and consequence of our work and also nature over winter with heavy rainfalls has flushed out those rivers, and they're now back to a pretty pristine condition, I would argue. And we've also done some environmental work around the sides of the river, planting trees and shrubs and some seeds. So I think we've done a pretty good job of the river remediation there, and certainly the local community and the national authorities are happy with the work we've done on it. So that's just a quick update on some of our sustainability work. Operationally, where are we? KOUNRAD, which is our first operation, we've now got about 134,000 tonnes of recoverable copper to recover from KOUNRAD. There's an aerial photograph there. I think most of you know the KOUNRAD operation. It's an old open pit, and what we're doing is we're doing leaching processes on the waste to the east and to the western dumps through a leaching process and recovering the copper through an SXEW plant. As I say, about 134,000 tonnes of copper still to recover on this project, with a life of mine out to 2034. Next slide, Louise. Just a production profile. It is quite seasonal. We produce more in the summer months, Q2 and Q3, than we do in Q1 and Q4, when it can get down to -30, -35. That's all taken into consideration to deliver on our guidance this year, which is 12,500 to 13,500 tonnes of copper. At the half year, we've just reported this morning 6,200 tonnes of copper, and we're on track for the upper end of that guidance range at the 13,500 tonnes pure cathode copper. Next slide, please. And lastly, on KOUNRAD, in terms of some of the capital investment into the project, most of the capital has been invested over the years. Our ongoing CAPEX is around about $1 to $2 million. And something that we're currently doing, and we've finished phase 1 on, is what we call the intermediate leach system in the western dumps, which is effectively a freshwater pipe from the east to the west, which will help us with the irrigation of those older dumps there. And then we'll be taking the offlow from those onto fresh dumps to enhance the offtake of the PLS. That'll be in operation in the summer months of 2023 for 7 months of the year. Moving quickly on to the SASA zinc and lead mine in North Macedonia. We acquired this asset approximately 4 years ago now, and in that time it's generated EBITDA, as you can see on the slide there, of $214 million, and we've repaid debt now of $134.5 million of the approximately $200 million of debt that we took on at the time to acquire the asset. The reserves and resources are out to 2037. And it is a very different operation from KOUNRAD. It's an underground, traditional underground lead and zinc mine. Quick production update. I think Gavin alluded to it. I may have mentioned it in the initial slide that we had a couple of production issues in the early months of this year, with development falling behind and then some ground condition issues at 910 and 990. We have got a recovery program in to actually recover from that and try and improve on the grades moving forward. We've had a couple of good months in July and August, and as a consequence of that, we as a board have decided that we'll stick with our current production guidance, even though the published numbers from the first half of the year look like we're falling behind a little bit. You can see those numbers there on the slide, but we are sticking with the production guidance of 23 to 25,000 tons of zinc and 30 to 32,000 tons of lead in concentrate. And at SASA, we have a capital program to change the method of mining effectively. A number of aspects to this program. One is a new decline to go to the lower parts of the ore body. That's a slightly bigger tunnel than the ones we have currently. So it's 4.5 meters by 4.5 meters as opposed to the 3.5 meter tunnels that we inherited for the access to the ore body when we bought the mine. So that started, we've done about 200 meters of development there. We started on the 910 level where we've done 188 meters, and we've now built the portal on surface and we've gone about 10 to 12 meters into soft rock, and we expect to hit hard rock shortly and do about 780 meters of that decline. The reason we're doing this decline, easier access into the ore body, it improves the ventilation, and it will enable us eventually twofold. One, to potentially increase the production capacity to 900,000 tons, and also potentially in the future we're looking at a trade-off study between using electric vehicles as opposed to diesel vehicles. Next slide, please, Louise. Just a quick diagrammatic of where the decline is, going from the process plant down to the Spinnureka ore body, which is the ore body on the left of the diagram there, and just accessing it from there. And the other ore bodies you can see actually goes through the Glamoreka ore body. As part of the life of mine review and the cut and fill project and the transition to cut and fill mining, one of the aspects we need to do is build a paste backfill plant. Effectively, this is the plant that takes the tailings from the flotation plant, adds cement and various reagents and turns it into a paste, which is then piped through the mine and back into the voids that we've created from the mining process. This plant itself is well advanced to start construction Q1 of next year and complete construction by Q4 of next year. Most of the key equipment has been ordered and is in the process of being manufactured now to be delivered on site in Q1 or earlier of next year. And in terms of the pipe work, what they call the reticulation program, we now have on site 4.5 kilometers of the pipe work ready for installation, which will start in Q4 of this year. So that's all on track for the end of next year. And just moving to the last part of the cut and fill project, probably the more complicated aspect of it is for a while we weren't 100% clear where we might be able to place what we call the dry stack tailings. So whereas at the moment we store our tailings in a tailings facility, which is a wet dam facility, the intention in the future is for quite a large proportion of our tailings to be extra moisture taken out of them, turned into like a dry cake, and put on the surface in an engineered structure. And that's now been determined where we'll place that. It's at the old TSF2, close to where the admin and the mining facilities are themselves. And the diagram you can see there, not the best in the world, I have to say, but it's a landform building in between the valley sides, and how we will structure that particular landform. The other side of it is a dry stack tailings filtration plant, and we're well advanced in terms of the design and the procurement of equipment for that plant, again to be delivered by Q4 2022. So that's just a quick update where we are on that program at SASA to move to cut and fill mining. Quickly on capital allocation priorities, fourfold really. First is return to shareholders, and we've announced a healthy dividend this morning of 8p, which is 40% of the free cash flow. That'll be paid October the 22nd to shareholders on the register on October the 1st. And that takes us to a total repay to shareholders of $229 million, or £1.20 per share since we started paying dividends back in December 2012. We've also announced a 10 million early repayment, should I say, of our corporate debt facility on top of the regular payments that we make of $3.2 million per month to delever the balance sheet quite quickly. Last two legs of it, obviously the investment that I just mentioned in the cut and fill project at SASA, we've earmarked $18 to $19 million of CAPEX this year and next year to finish off on that program. And the reasons why we're doing that program, as I've already stated, is really to move the mine into the 21st century, improve the efficiency with which we extract our mineral resources, and improve the management of our tailings storage in a more environmentally friendly way. And last but by no means least, we continue to look at growth opportunities. I can see quite a lot of the questions are about that, and that's been a focus for a long time. It was when we just had KOUNRAD, and we managed to acquire the SASA mine. It continues to be a focus. There's no rush for it necessarily. We have got long lives of our assets, but we continue to look on an opportunity basis to acquire another asset to build the portfolio of CAML's assets, such that they're accretive for our shareholders, and we can create some value out of it. So far this year, we've increased the energy and the effort on that, and we've looked at 18 opportunities with 11 NDAs signed and 1 site visit undertaken. And just finishing off on the slides before we move to questions, just to summarise, some good results announced this morning. We have a strong and sustainable business, we believe. Strong operational performance, a few challenges in the first half of this year, which we've got a recovery programme in to try and overcome in the second half of the year. Strong EBITDA and free cash flow margins. Our capital allocation priorities, as you can see, paying money back to shareholders and paying some debt down. And looking further ahead, we need to complete on our climate change strategy, which I've mentioned already. We're pleased with the reduction we've achieved so far, but there is more to do on that. Production guidance, we are maintaining it. There is a slight challenge on the lead and zinc at SASA, I'll be the first to admit, but we've got the recovery programme in place. And we are still experiencing a strong metal price environment into the second half of this year, which is also encouraging really for the full year results, which will be announced next March in line with the audit procedures, etc. So at that point, that's the end of the presentation. I will hand over to any questions from the floor, and we'll try and answer those questions as best we can.
That's great. Nigel, Gavin, Louise, thank you so much for updating investors this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard, and we'll notify you by email when it's ready for your review. I'd also like to remind you that your feedback is important to the company, and immediately after this presentation's ended, you'll be redirected for the opportunity to provide your feedback in order that the company can better understand your views and expectations. Louise, it might be an appropriate time, if I may, to hand over to you. Investors have submitted questions throughout today's event. So firstly, thank you to investors that have submitted those questions. Perhaps I could ask you to read out the questions where it's appropriate to do so and give a response. So thank you very much.
Sure, absolutely. Thanks very much, Mark, and thanks everybody for posting these questions. So the first one we've got is from Jeffrey. He's asking if we can please give him an update on Copper Bay, what the position is with Copper Bay.
Sure, no problem. So Copper Bay is a small tailings retreatment project that we own in Chile. We've owned it since 2012. I think it was in 12 or 13.
12, 13.
Yeah.
Forgotten now.
Yeah. We completed a feasibility study in 2016, and with the purchase of the SASA mine, concluded that the levels of production and CAPEX required for Copper Bay, it was no longer a core part of our portfolio. So decided to try and dispose of that asset, and we've actually written off the investment in Copper Bay back in 2016, I think it was, off the balance sheet. It's still subject to a sale process. We did have a number of parties interested, which we whittled down to one or two, and one of those has walked away, and we're looking at potentially trying to sell the asset to some of the other potential suitors in there. Failing that, the board of Copper Bay will have a look at other options available to us.
Okay, we've got a couple of questions here from Duncan and Simon. I'm going to read them out together because I think they're kind of asking for a similar answer. So Duncan's saying, what's the likelihood of buying further mines? And Simon's question is, you state management's focus on business development has accelerated. Are there any opportunities you see as happening in the short term?
I'll try and have a go at that, Duncan and Simon. Yeah, I mean, clearly we'd like to think there are opportunities for buying other mines. Actually finding the right one to fit our profile is quite difficult, actually. I mean, you are subject to a little bit of geography and geology. You can't just choose where you want to buy a mine because there's lots of pros and cons with mines, and you're dependent on where the geology states the ore bodies are. So we do look, but it's very much on an opportunistic basis. We're in no rush. I think we've already mentioned that fact. We're focusing on delivering on the capital project at SASA. But in the meantime, we have increased the energy towards looking for business development opportunities. We believe there's a window for the next maybe 2 or 3 years whereby we would like to find something, but it has to fit their profile. It has to fit certain criteria in terms of value accretion for our shareholders. Have to have the right risk reward kind of balance. But we do look quite broadly in terms of geographical locations. So we will look in Africa, South America. We've looked in North America. We've looked. Ideally, we'd like to find something in our, what we call maybe our backyard, so in Kazakhstan or Europe, certainly Macedonia or Kazakhstan. Metals, in terms of the metals we look for, sticking primarily with our base metal portfolio of copper, zinc and lead, and I think copper will be our preferred metal. But again, we have started thinking a little bit more creatively than that to some of the future metals, some of the more creative metals that we've not been involved in the past, like nickel, maybe lithium, but these are areas that we might need to joint venture with partners because we might not necessarily have the expertise there. So it's a difficult answer to give very specifically about what we're doing, but we do look at lots of aspects, and opportunity wise we do look for business development opportunities, and I would hope that within the next few years we do find some that is as as good as SASA's proving to be from the addition to KOUNRAD.
Okay, Simon is asking if we can tell him what our hedging policy is.
Sure, Simon. The hedging policy for interest rates and foreign exchange is sort of just mainly restricted to what sort of instruments we can use, which will be swaps in that case. But I think you're probably more asking about the metals, given that we did hedge 30% of our metals for 2021. The hedge policy itself allows the board to hedge up to 50% of our rolling 12-month production. But what we have hedged and was 30% of a sort of straight 12 months in effect. So we haven't layered on any more hedges as those have rolled off. The decision to hedge was made in December last year in the context of the prevailing commodity prices at the time and our additional capital requirements to fund the cut and fill project. So that was the main reason we did it.
Okay. Douglas is asking, what is the average cost of debt, please?
Douglas, I actually worked that out for you when I saw it come up. It's 3.86%. We do have.
It's quite impressive.
It's very impressive.
Well, Nigel was doing all the hard work there. So It's split into two now, obviously heavily weighted towards our Traxys corporate debt facility, which at the end of the period was 52.2 million outstanding on that. And that runs at LIBOR plus 4%. And then we have $10 million of available liquidity in North Macedonia, of which 8.7 million was drawn. At the end of that, the average cost of that is around 2.5%.
Brilliant. So Nick is asking whether we have experienced any supply chain issues.
Nick, not to date. It's a good question, I guess, in the context of two things. One is COVID. That was one of the big risks we saw this time last year. And we put quite a lot of mitigation in place around stock levels and critical spares and that sort of thing to see us through that period. The knock-on effect of COVID has really become freight and availability of containers, and that is both supply chain for us, plus also export of some of our material that we produce at North Macedonia. But to date, we haven't actually experienced any supply chain issues, and we're still managing to get our hands on everything we require at both sites with ease. So nothing to worry about there, but it is a good question because it is a risk that we do see rising across the industry.
Yeah.
Steve has asked another question about M&A, whether we're looking at acquisitions and what metals we would be looking at. I think Nigel has answered that. If you feel like he hasn't, then post again. But otherwise, I'll move on if that's okay.
Well, I think Nigel answered it in a very rambling fashion. To be fair to Steve, so
yeah, if Steve feels Nigel answered it in a rambling fashion, then please feel free to stay.
We could probably talk for an hour about business development and how hard it is, really. Whether what stage on the development profile you're looking at, which metals, which jurisdictions, risk profile, etc. But certainly metals is maybe the easiest part to answer, Steve. To be honest with you, copper is our primary metal that we look for. If I'm honest with you. We'll stick with the other base metals, but again, we will be creative to look at what else we could add value to the shareholders with.
Okay.
Nigel, Kevin, Louise, I think, save for a very nice comment from Alex, I think you've addressed all the questions submitted by investors, so thank you so much. And of course, if we see any further questions come through, we will make them available to the company for their review. Nigel, Gavin, I know investor feedback is important to you, and we'll shortly redirect investors to do so. But before doing it, I thought I'd ask you for a few closing comments, and then I will redirect investors.
Okay, just a few closing comments. Firstly, to thank everybody for taking the time out to listen to myself and Gavin presenting the company. We're always open to people contacting us, and Louise, as investor relations, will always listen to people and take questions. And if there's any more that people want, then we're more than happy to do that. But I hope you found it helpful. It was a quick canter through our results. There's lots more on some of the questions in particular that were raised, certainly on the business development, to say there's a long conversation can be had about that. And hopefully you found the presentation useful, and hopefully, as Alex stays there, and thank you very much for those nice comments, Alex. I appreciate that in terms of another set of fantastic results, which we're pleased with this morning to announce.
That's great. Thank you very much indeed to you all. Can I please ask investors not to close this session, as we will now automatically redirect you for the opportunity for you to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Central Asia Metals PLC, we'd like to thank you for attending today's presentation. That now concludes today's session. So good afternoon to you all.